Most traders believe the problem is that they are not seeing enough. They think the answer is more charts, more entries, more precision. They sit in front of the screen convinced that if they just focus harder, react faster, and analyze deeper, something will finally click. It feels productive. It feels like progress. But what is actually happening is much quieter and far more destructive. They are training their mind to depend on noise. The mistake is not a lack of information. It is an inability to remain stable in the presence of uncertainty. The mind looks at movement and feels a need to respond. Every fluctuation begins to feel meaningful. Every small shift starts to carry emotional weight. Over time, this creates a subtle pressure in the body, a constant state of readiness. Not calm awareness, but tension disguised as focus. This is where most traders lose control without realizing it. Not in the trade itself, but in the moments before it. The urge to act does not come from clarity. It comes from discomfort. The discomfort of waiting. The discomfort of not knowing. The discomfort of being still while the market moves without you. The nervous system does not like stillness when money is involved. It interprets inaction as risk. It begins to create internal signals that push you toward action, a tightness in the chest, a slight restlessness in the hands, a quiet thought that says you might miss it. None of this feels dramatic. It feels reasonable. It feels like intuition. But it is not intuition. It is a response to perceived threat. When you operate from that state, your decisions begin to shift. You stop waiting for alignment and start looking for justification. You lower your standards without noticing. You enter trades not because they are clear, but because you want relief from the tension of watching. This is why lower time frames feel so compelling. They give the illusion that something is always happening. There is always a reason to act, always a pattern forming, always an opportunity within reach. It creates the sense that control is possible if you just stay engaged. But this engagement comes at a cost. The more you react, the more your nervous system stays activated. The more activated it becomes, the less capable you are of seeing clearly. You begin to confuse movement with direction. You start to treat randomness as signal. From the outside, it looks like overtrading. From the inside, it feels like responsibility. Like you are doing what a trader is supposed to do. Staying involved, staying alert, staying ready. What is missing is not knowledge. It is regulation. A regulated trader does not feel the need to respond to every movement. They are not pulled by every fluctuation because their internal state is not tied to the market's behavior. They can observe without reacting. They can wait without pressure building inside them. This is where the shift begins, not with a new strategy, but with a different relationship to time. When you step back and allow yourself to see the market on a broader scale, something changes internally. The urgency starts to fade. The need to act begins to loosen. You are no longer reacting to every small movement because those movements lose their emotional significance. The higher perspective does not just change what you see, it changes how you feel. Instead of tension, there is space. Instead of urgency, there is patience. Instead of constant decision-making, there is quiet observation. This does not happen instantly. The mind will resist it. It will look for reasons to go back to the noise. It will tell you that you are missing opportunities, that you are being too passive, that you need to do more. But if you stay with the discomfort long enough, something stabilizes. The need to act weakens. The constant pressure begins to dissolve. You start to realize that most of what you were reacting to was never important to begin with. This is where discipline actually forms, not as a forced behavior, but as a natural outcome of a calmer internal state. You are no longer trying to control yourself. You are no longer fighting impulses. The impulses simply lose their intensity. From this place, your interaction with the market becomes different. You are not chasing movement. You are observing direction. You are not trying to predict every turn. You are allowing the broader structure to reveal itself over time. There is less activity, but more clarity. Fewer trades, but more intention behind each one. And with that comes a different kind of confidence. Not the confidence that comes from being right, but the confidence that comes from not needing to be involved in everything. This is where most traders begin to separate, not because they found a better system, but because they stopped reacting to the wrong things. Most traders think patience is something you apply after you understand the market. In reality, it is the condition that allows you to understand anything at all. Without it, every observation becomes distorted by urgency. Every decision becomes influenced by the need for resolution. When you are not patient, you are not neutral. You are leaning forward internally, waiting for something to happen. That leaning creates pressure, and pressure always seeks release. In trading, that release comes through action. The problem is that action taken to relieve pressure is rarely aligned with clarity. It is reactive. It is driven by the need to feel settled again. You take the trade not because it is right, but because you no longer want to sit with uncertainty. This is why many traders feel temporary relief immediately after entering a position. The tension drops. The mind quiets down for a moment. It feels like progress has been made, but that relief is not a sign of good decision-making. It is a sign that discomfort has been discharged. And then the cycle begins again. The market moves, the position fluctuates, the nervous system reactivates. Now the pressure returns, but in a different form. Now it is tied to outcome. You start watching more closely. You start interpreting every movement as confirmation or threat. At this stage, you are no longer observing the market. You are reacting to your position. This is where emotional volatility increases. Small movements begin to feel large. Time begins to slow down. You check more frequently. You adjust mentally even if you do not act physically. The trade becomes something you manage internally, not structurally. All of this originates from the same place, an inability to remain steady before the trade ever existed. When you begin to operate from a higher level of perspective, this entire sequence starts to change. Not because the market behaves differently, but because your relationship to it does. You are no longer looking for constant engagement. You are not scanning for something to do. You are allowing the market to develop without interference. This creates distance, and that distance reduces emotional intensity. From a calmer state, time begins to feel different. You are not measuring progress in minutes or hours. You are observing development over longer cycles. This naturally filters out the majority of impulses that would have previously triggered action. What remains is slower, but more stable. This stability is what allows you to hold a position without constant internal conflict. You are not shaken by small movements because you are not anchored to them. Your reference point is broader. Your expectations are not tied to immediate feedback. This does not mean you are detached or indifferent. It means you are not emotionally dependent on short-term validation. There is a difference. Most traders seek confirmation quickly because they cannot tolerate the space between entry and outcome. That space feels uncertain. It feels exposed. But when you learn to operate from a more regulated state, that space becomes neutral. It is no longer something you need to escape. This is what allows you to stay with a position long enough for it to actually develop. Not because you are forcing yourself to hold, but because there is no internal pressure telling you to exit prematurely. At the same time, this stability also makes it easier to accept when you are wrong. There is less attachment to the position, less need to defend it. You can step away without resistance because your identity is not tied to being right. This is where control actually exists, not in predicting the market, but in maintaining your internal state regardless of what the market does. When this becomes your foundation, your behavior naturally changes. You stop overanalyzing small movements. You stop searching for constant opportunities. You stop trying to extract meaning from randomness. Instead, you wait. And waiting, in this context, is not passive. It is an active form of restraint. A decision to remain stable until something clear presents itself. A willingness to do nothing without feeling like you are falling behind. This is difficult because it goes against how the mind is conditioned to operate. The mind wants progress to be visible. It wants feedback. It wants movement. When those things are absent, it assumes something is wrong. But in trading, the absence of action is often where the real advantage is built. You are preserving capital. You are preserving energy. You are avoiding unnecessary exposure, all of which are invisible in the moment, but critical over time. This is the part most traders never fully accept, that doing less is not a limitation. It is a refinement. You are not missing opportunities. You are filtering them. And over time, this filtering process begins to shape your identity. You no longer see yourself as someone who needs to be involved. You begin to see yourself as someone who selects carefully, someone who waits without pressure, someone who acts without urgency. This shift is subtle, but it changes everything. Because once your identity changes, your behavior no longer requires constant effort. It becomes consistent by default. You are not trying to be disciplined. You are operating from a place where discipline is the natural response. And from that place, the market becomes quieter. Not because it has changed, but because you are no longer reacting to every part of it. You begin to see what actually matters. At some point, the focus stops being about finding the right trade and starts becoming about maintaining the right state. This is where the real separation happens. Not in what you see on the chart, but in how you experience the process itself. Most traders never reach this stage because they are still trying to fix their results directly. They adjust entries. They change time frames. They search for better confirmation. But the instability remains because the source of the problem has not been addressed. The source is internal pressure. As long as there is pressure to perform, pressure to make money, pressure to be right, your decisions will continue to carry tension. And that tension will distort your perception in subtle ways. You will see setups where there are none. You will ignore risk when it feels inconvenient. You will hold when you should exit, and exit when you should hold. Not because you lack knowledge, but because your state is not stable enough to apply it. This is why consistency feels out of reach for so many. They are trying to build it on top of an unstable foundation. When you begin to stabilize internally, something shifts in how you approach risk. You no longer see it as something to overcome or avoid emotionally. You see it as a condition that exists in every trade, something neutral, something to be respected, not reacted to. This changes how you size positions. It changes how you sit with uncertainty. It changes how you respond when the market moves against you. Instead of tightening internally, you remain steady. There is no immediate need to fix the situation, no rush to regain control. You allow the structure of the trade to play out without interference from emotional impulses. This is where survival becomes the priority. Not survival in a dramatic sense, but in a quiet, consistent way. You begin to understand that staying in the game matters more than any single outcome. That protecting your capital is not a defensive mindset, but a necessary condition for long-term participation. From this perspective, many of the behaviors that once felt normal begin to look unnecessary. The constant monitoring, the need to always be in a position, the urge to recover quickly after a loss. You start to see how much of your past activity was driven by the need to feel in control, rather than actual clarity. And with that awareness, those behaviors begin to fall away. There is less urgency to re-enter after a loss. You allow space for your state to return to neutral. You do not carry the previous trade into the next one. Each decision stands on its own, without emotional residue. This is what creates consistency over time. Not a perfect strategy, but a stable process. You begin to trust that if you remain steady, opportunities will come. You do not need to force them. You do not need to chase them. You simply need to be ready when they appear. This readiness is different from anticipation. It is not tense. It is not forward-leaning. It is quiet, observant, patient. From this place, your trades begin to reflect your state. They are fewer, but cleaner. Entered without hesitation, but also without urgency. Managed with awareness, not fear. Exited with acceptance, not frustration. There is a noticeable absence of emotional spikes. Wins do not create euphoria. Losses do not create collapse. Everything begins to level out. This emotional stability is what allows you to think clearly over longer periods. You are not resetting your mindset every day. You are building continuity. And continuity is what allows growth to compound. Not just financially, but mentally. Each experience reinforces the same pattern. Calm observation, selective action, measured response. Over time, this becomes your default way of operating. You no longer feel the need to prove anything through the market. You are not trying to validate yourself with results. You are simply executing a process that aligns with how you function best. This removes a significant amount of psychological weight, because when your identity is no longer tied to outcomes, you are free to operate with clarity. You are no longer protecting your ego. You are not defending positions. You are not reacting to every fluctuation as if it defines you. You are just participating. And in that participation, there is a quiet confidence, not built on certainty, but on stability. You trust your ability to remain composed regardless of what happens. This is what allows you to stay with trades that take time, to sit through periods where nothing seems to be happening, to allow movement to develop without interference. Most traders cannot tolerate that space. They interpret it as stagnation, as lost opportunity. But in reality, it is where the structure of the move is forming. When you are no longer disturbed by that stillness, you begin to align with a different rhythm. Slower, but more reliable. Less visible, but more meaningful. This is where the real shift completes. You are no longer reacting to the market. You are moving with it, not through effort, but through alignment. And that alignment does not come from forcing discipline. It comes from removing the instability that made discipline necessary in the first place. Most traders end their journey still believing that the answer was always somewhere in the market, that if they had just looked differently, reacted faster, or found a better entry, the outcome would have changed. What they rarely consider is that the market was never the unstable element in the equation. It was always them. The inconsistency, the frustration, the repeated cycles of progress and collapse, all of it traces back to the same place. An internal state that shifts too easily. A mind that cannot stay steady when uncertainty is present. A system that reacts before it understands. When that remains unchanged, nothing external can fix it. You can adjust your approach. You can refine your method. You can even align yourself with broader movements. But if your internal state is still reactive, you will eventually interfere. You will override good decisions with emotional ones. You will abandon structure when it matters most. This is why so many traders experience moments of clarity that never last. They see what they were doing wrong. They correct it briefly, and then, under pressure, they return to the same patterns. Not because they lack discipline, but because their baseline state has not shifted. When you begin to understand this, your priorities change. You stop asking how to trade better and start asking how to remain stable regardless of conditions. This question leads you in a very different direction. You start to notice the moments where tension builds before you act, the subtle discomfort that pushes you toward a decision, the internal dialogue that tries to justify movement when nothing is clear. Instead of following it, you observe it. And in that observation, there is a gap, a small space between impulse and action. At first, it is barely noticeable, but over time, it expands. That space is where control exists. Not control over the market, but control over your participation in it. The more you operate from that space, the less reactive you become. The less you need to be involved, the less you feel pulled by every movement. You begin to trust that not acting is often the most accurate response. This trust is not blind. It is built through experience, through seeing what happens when you do less, but do it with clarity. Through recognizing that the majority of your past mistakes came from acting too soon, not too late. As this becomes clear, your pace naturally slows. You are no longer in a rush to find something. You are not scanning for constant engagement. You are simply present, allowing the market to reveal itself over time. This presence is quiet. There is no urgency in it. No pressure to perform, just awareness. And from that awareness, decisions become simpler. You either see alignment or you do not. If you do, You act without hesitation. If you do not, you wait without resistance. There is no internal negotiation, no second guessing. No need to force clarity where it does not exist. This is what makes the process sustainable. Because you are no longer relying on motivation or discipline to maintain it. You are operating from a state where those things are no longer required. Your behavior is consistent because your internal state is consistent. And over time, this consistency begins to reflect in your results, not in sudden spikes or dramatic gains, but in steady progression, in reduced drawdowns, in fewer mistakes, in a smoother overall curve. It may not feel exciting, it may not look impressive in the short term, but it is stable. And stability is what allows growth to continue without interruption. This is the part most traders overlook. They are drawn to intensity, to fast movement, to visible results. But those things are rarely sustainable. They come with volatility, both in the market and within themselves. What actually builds over time is much quieter. It is the ability to remain unchanged while everything around you moves, to stay grounded when outcomes are uncertain, to act only when it is clear, and to remain still when it is not. This is what turns trading from a cycle of reaction into a structured process. You are no longer trying to win each moment. You are allowing the process to unfold over many moments without interference. And in doing so, you remove the very thing that was holding you back. Not the market, not the strategy, but the instability within you. When that is no longer present, everything else begins to align naturally. Decisions become cleaner. Timing becomes less forced. Outcomes become more consistent. Not because you are controlling the market, but because you are no longer disrupting your own process. And that is where the real shift happens. From reacting to participating, from forcing to allowing, from instability to structure. It does not feel dramatic. It feels quiet, controlled, stable. But that is what lasts.